How are you?
Good morning, good, thank you.
Good. Welcome to level 2 and a bit more freedom.
Yes, it's going to be an interesting day today, I think, just seeing how people go.
Oh.
I'm not quite sure whether to get the jet ski out and go for a hoon up the river or go down and get the aeroplane out and go for a fly today. But I guess I'm lucky I've got choices of freedom.
Well, you can both if you really get organised.
Both of them probably require emergency services, Grant, or they just stay at home, please.
I think I might go for a fly. Actually, that might be the go.
Be a fantastic day out there, Grant, for a flight. Yep.
I reckon.
Sounds like the epitome of a first world problem, Councillor Hadfield.
Well said, Hamish.
That sounds like the definition of a first world problem.
Well, you might be right. You might be right, mate. But yeah, I guess the aeroplane hasn't been started up for a while, so there might be a little bit of work to do around around all that sort of stuff, I guess. So I'll have to check with the powers that be, those that know more than I do.
Grant, is it one that you just lease or just hire per hour, or have you got a syndicate?
Yeah, just a club plane, Shane.
Cool.
You know, one of the great sayings in aviation is that if you want to make $1 million in aviation, you start with 2 million.
I think it's the same analogy for yachting as well, I think.
Yep.
Yeah, very much.
Yep. The old adage about boats, you know, they're a hole in the water where you pull your money. Yep.
That's right.
That's what I hear.
The jet ski is not quite as bad as a boat, I don't think.
No. Yeah, I agree. Yeah.
It's nothing compared to what you can throw away on race cars, I'll tell you.
I was actually thinking that, Shane, flying aeroplanes is actually probably quite cheap compared to racing cars, I suspect.
I know a bit about that, don't we, John?
There's very good value in some ones. You know, Toyotas are very cheap to run. Yeah, right.
Yeah.
Good morning, Stuart. We are ready to go when you are, and we are live.
Okay. I will just. I'm just trying to switch to from my phone to my computer, which might take me 30 seconds, I think. So I'll just see if I can do that. And we'll be underway. Here we go. Oh, that's better. Right. Right, this one. Let's leave the other one.
Right, can you hear me there?
No, it's very faint, Stuart.
Is it? Oh, okay. Hang on. Try again. How's that? Any better?
No.
Clear but faint.
Oh.
Very loud and clear into my hearing aids. Perhaps that's a benefit.
Interpret for us.
Had a meeting yesterday, it worked quite well, but today not so good. It's still faint, is it?
No, that's a bit better.
All right. Okay. Speaking of the mic. Right. Anyway, we'll get underway. Thank you for your patience. Yeah. Well, good morning, everyone. This is our audit and risk meeting for the 14th of May. First one we've held on Zoom. And, first time I have chaired a Zoom meeting, so patience with me. Have chaired a number of meetings over the years, but the first time on Zoom. So we'll see how we get on. Call for apologies. I don't believe we have any. Everybody is present. Is that correct? Yep. Item 3, confirmation of minutes. Minutes of the audit and risk meeting held on the 13th of February are in the papers. Are there any amendments required?
Mr. Chairman, I'd be happy to move that the minutes of the Audit and Risk Committee meeting held on the 13th of February 2020 be adopted as a true and correct record.
Thank you. Somebody like to second that?
I'm happy to second that.
Thank you, Councillor Marsh. Just before we put that, I do notice a spelling mistake with the new employee, Mr. Michael Hawkerry there. So if we take the I off that, it'll be all fixed. Put the motion. All those in favour, please say aye or raise your hand. Against? Thanks. Carried. Item 4, declarations of interest. Has any member got a declaration of interest they need to declare? Councillor Humphrey.
I don't have a declaration of interest, Mr. Chair, but I am just wondering, is there any chance you can get the video on your computer working?
Oh, apologies. I'm sorry about that. How's that?
Much nicer. Thank you.
There we go. Thank you. Click the right buttons here. So any declarations of interest? No. Moving on. Item 5 is notification of late items. I'm not aware of any. No late items. All right. So we'll move on to item 6, which is presentations and overview of insurance liabilities. Presentation by General Manager Corporate and Regulatory. So Shane, I'll pass to you.
Thank you, Mr. Chair. Yeah, this is a presentation that was due to come to council before Christmas, as that's when our renewal date is in November of each year. But for a number of reasons, elections and forming of new committees and induction, it got pushed out. So, but it is now appropriate that we give this to Audit and Risk, given that we are about to enter into the preliminary work for this year's renewals, which again is in November. So I just thought we'd do a quick overview. So I'm going to share the screen with you. Can you see anything?
Yep, it's coming up.
Right. I can't.
Yeah, we've got your presentation in front of us.
Yeah, I haven't. That's the, hold on a minute. Right, I think we're technology sorted. So our insurance, we're in a group, an NWLAS group, and I think you should be able to see the insurance group slide there.
Yep.
So it's made up of essentially 7 councils, which are the NWLAS councils. Except for our infrastructure insurance, we were joined with 2 councils from Hawke's Bay. So they've joined us for that. However, the group is part of a bigger Aon, if you like, conglomerate that goes and sources its own reinsurance from Lloyd's and from Singapore. That's made up of 66 councils. So that gives Aon the ability to be able to source that direct from reinsurance, because of the large amount of asset that they have. Our own insurance portfolio, essentially it's made up of those 5 areas, material damage, which is largely all our assets above ground. Infrastructure, which is all our below ground assets, and we've quite deliberately put a lot of our infrastructure above ground into our material damage cover, because the below ground assets are only covered for natural hazard, and we want our above ground assets covered for the likes of fire as well. So we put them into our material damage cover. Commercial vehicle, for obvious reasons, and liability. Now there's several forms of liability I'll cover. I'll just get into those a bit more. However, we do self-insure. That's to do with our material damage cover. We self-insure up to $100,000 in terms of a single claim. And we run our own internal insurance fund to cover that. That was a exercise we did some years ago around premiums versus self-insurance, and there became a figure that was quite economical to self-insure at, and that was the $100,000.
Shane, could I ask a question? Does that mean we've got excesses of 100,000 on all policies, or how does that work? We just don't carry any cover for any item that might be less than 100,000.
Yeah, so all of our policies, different policies, do have deductibles. So essentially, our 100,000 X is our deductible for our material damages cover. First one there, the public liability, we have an insurance cover of 165 million. Elected members are an insured party under the council's, under our insurance policy, so you are covered. I'll get into what each of these mean a bit later. Professional indemnity, again, 165 million in cover. That's getting quite hard to purchase now. Unfortunately, local government has suffered, well, not suffered, but being party to a number of significant claims, especially in the weather-tight homes area over the years. And insurers are starting to get a little bit nervous with that type of cover. So it is getting a little bit harder for our brokers to place. Personal accident, I'll get into that a little bit more as well. So what does it cover? Public liability is third-party damage, which we covers the cost of us defending any claim from any third party around damage to them or loss incurred by them, and it covers our legal costs and also any liability that we are legally required to pay. So that'd be an award of liability by any court or any mediated process. The key thing with us and with any of our insurance policies, and this applies to elected members as well, is that we don't, can't and shouldn't make missions of liability. There is an exclusionary clause in all of our contracts of insurance that that if we do make an omission of liability, then that excludes cover. Professional indemnity, so breaches of professional duty or negligence resulting in another financial loss, covers the cost of defending the claim and any other compensation we're legally required to pay. This really is the cover that we rely on for the likes of our regulatory team or our other team who are doing design work or putting in place advice that people may rely on that could result in them incurring a loss. A limb is a classic example where someone might get a limb from council, relies on that to buy a property. Subsequently, the information of the limb proves incorrect and they potentially suffer a loss, then they have a claim and we can then rely on this cover. Elected members are covered against this, but I must point out that this is cover where you act in the best interests. So if you knowingly or wrongfully, knowingly, give some advice which you know to be wrong and someone incurs, then that is another exclusion from the cover. Personal accident, we have an accidental death and disablement cover for the mayor, councillors and the executive team. The main reason for this cover, it is one that's been in place for some years, is to cover the cost of a by-election or a recruitment process for the exec team. by-elections are inherently expensive. I think they run around 150k, and the recruitment process normally for second-tier managers is also expensive.
Jane, could I just ask a question there, please?
Yep.
With the disablement benefit, with other organisations that I've looked into this for, they can be incredibly difficult to actually claim on. The disablement almost has to be death in some cases. Has this got a reasonable definition around it?
I haven't got the definition in front of me, but yeah, right. There's a little bit of a crossover here with ACC.
Yeah.
And that's where you usually find the difficulties. I think it's more in the naming of the policy than it is actually what you can get.
Yeah, I think that's true. Okay,
yeah.
Thanks.
So those are our various covers. In our liability, we also have cover. We also have other insurance covers. So we are insured for cyber insurance. We are insured for crime. We are insured for fraud. So all of those will roll up into all of those in the background insurance covers. The big ones though are our infrastructure insurance and the three waters in particular. We don't and we can't insure roads and we don't insure bridges. That's a decision that was taken by the infrastructure team. But however, what we did was last year, it started the year before that, but culminated last year, we commissioned Aon and Tonkin and Taylor to undertake a probable maximum loss analysis of our infrastructure. That was based around earthquake scenarios, and they looked at two scenarios to see whether we had sufficient cover. And what it turned out was that we do, but it's something we do need to keep looking at. Our cover is shared cover, as I said before, we're in it with other councils. And why we need to keep looking at it is that if there was a significant earthquake and there was three councils impacted, for instance, us, Rangitikei and Horowhenua, and that's not inconceivable, then we all have to share the same insurance pot. And whilst at the moment we can probably get away with that, the way that prices and values are starting to increase, one would suggest that we need to keep a very close eye on whether that cover is sufficient. Bearing in mind though, that we only have to insure for 40% of the loss. 60% of loss in a natural disaster is looked after by the government. So I talked a little bit about values. So we're currently working with Aon and MWLS. One of the things that our insurers have looked at is that councils' values in terms of replacement aren't very accurate. What tends to happen is assets are valued for the purposes for financial purposes, only to calculate depreciation, and not for full replacement. So they have book values, let's say. What the insurers now require us to do is to value that asset so that it's a full replacement value. So for instance, if the pipeline in Manchester Street is affected by an earthquake, what is the value of replacing that pipeline? Now, that's to our benefit to have that value accurate, because we're required to supply a schedule with all our assets listed and those values each year for renewal. The insurers will only pay what you put down on that schedule. So if we get it wrong and we have an event, we make a claim and we've got it wrong, that's just tough. So we are spending quite a bit of time, our asset managers and Rachel, who does the lion's share of all this insurance work for me, and actually I have to say, and acknowledge, put this presentation together for me, are spending a lot of time making sure that we've got all our values right. So that's the key. That's the key benefit for us, is to get it right and to make sure that our loss modelling's right, and to make sure that we have got council protected by the right amount of insurance cover. So open for questions.
Very good. Any questions from anybody? Councillor Hadfield. You've just muted, Grant.
Sorry about that. Yeah, Shane, I presume all the other councils and M&S undertake the same process, do they, in terms of regularly valuing what that replacement cost of those underground assets are?
Yeah, we have to. The insurers require it. And the reinsurers mainly now, all insurance companies are wanting more and more data from us to ensure that their exposures are within their risk limits. So, you know, when you start joining a lot of councils together, then the beauty of it for the insurers is it's spread over a large area. And it's unlikely if there's an event that everyone's going to get hit, so there's capacity there. So what they want to do is look at all the values and what value is spread over that cover. And so they need very accurate information from us. And like I say, we largely in the past, we've focused on more accounting values rather than replacement values. So it's a big piece of work, but the team's onto it. And I think we could honestly say that we are ahead of some councils in that area.
Okay, good. Councillor Humphrey. Then Councillor Short.
Thank you, Mr. Chair. Shane, I'm just interested in this piece of work you're doing and that you were just touching on in terms of the revaluation. Do you have sufficient data and information to work with to be able to accurately model the full replacement values, or have you identified some information gaps?
It's all there. And in terms of our material damage, quotable values are now doing our 3-year building valuations. So they'll be evaluating that for insurance purposes as well as market values. So, and the infrastructure team, Hamish's team, have got all those values. Actually, that work from infrastructure's really well advanced. They've had a couple of years now where they're really got on top of those values. But the difficult area for the material damages area is the insurers have somewhat changed the rules. We used to just lump sum insure a building or an entity. For instance, we used to lump sum insure the wastewater treatment plant. And now we have to break it down to every single building, every single chattel within the building, and that is taking a bit of time. So we can't just say, well, the wastewater treatment plant is worth X amount of dollars, therefore we'll insure it. It doesn't cut for the insurers now. So that's taking us a bit of time to decouple, if you like.
Okay, Councillor Short.
Thank you. Shane, I presume the reason why the infrastructure team has decided not to insure bridges is that any likely loss would be a weather event, and we would probably be covered by emergency funds from NZTA. Is that correct?
Yeah, that's Hamish can chip in here, but yeah, that's right. That's largely the reason.
Yeah, I think just to add to that, Councillor Short, the assumption is that the bridge structures, as you say, it would be a large event. We know that we get the enhanced FAR in terms of the NZTA subsidy. So we'll be looking at a minimum of 73% in the size of event that would take some of those larger bridge structures out. And then from experience in the past and discussions with NZTA, they have contributed sort of 90% plus to the cost of those significant emergency events. And so the cost of preparing a what if scenario and the premium attached to that, we made a call that it wasn't value for money to ensure that remaining component, whatever it may be.
Thank you.
Okay. Councillor Casey.
Yeah, thank you, Mr. Chair. Just, I may not have picked up on it through the information, but are we starting to see that sort of forecasted increase in premiums regarding earthquakes? I remember in the last term we had quite an audit and risk. We had quite a presentation from the insurance brokers in regards to the projected increase in premiums, and I think it was also tied up with climate change as well. So I just wanted to, in case I'd missed that, wanted to ask that question this morning.
Yeah, this year we saw a significant increase in premiums due to mostly all of those events. Now, we aren't ring-fenced to New Zealand events. These are worldwide events when you start talking about costs of reinsurance. So the large events overseas have an impact on the reinsurance market. So we did see increases this year. At the moment, our advice is that it's likely to see small increases for next year. There's no, but we're early days. I mean, we don't renew to November, so really the brokers haven't even started going to the insurance market yet. But the indications are that, you know, it won't get cheaper at the moment. It's still rather, they refer to it as a hard market. So.
Very good. Okay, any further questions?
Sorry, just one.
John, yes.
Yeah, sorry, just a bit of a processy question. The no admission of liability clause, is that incorporated in all of our employment agreements and contracting agreements?
I'd have to check on that, John. I'm not sure about the employment agreements. It's certainly staff are briefed through the induction process around that.
Francis is nodding, yes, I see, yeah.
Okay. Yeah.
Right. Okay. All right, well, thank you. Any final questions on that one? No, if not, we might move on. Just before we do, I should move back to item 1. I'm remiss in not welcoming back our independent member, John Falk. John,
that's all right.
Very pleased to have you back. So yeah, well, look, welcome aboard again for the next term. So thank you. Right, item 6 is in the hands of Francis, and it's a presentation on the employee. Sorry, it's not a presentation. It's an item on the employee engagement survey. Francis.
You are in fact right, Stuart. There's both a report and a presentation. So I will attempt to bring up the presentation now. Okay, is everybody seeing the Ask Your Team logo?
Yep, it's all there.
Okay, fair. So this is the second year that we've done our employee engagement survey with Ask Your Team. You'll recall that prior to that, we used to use IBM Connexa before they exited the engagement survey market. We chose to go with Ask Your Team because of the number of other councils around New Zealand using the survey. So we are able to benchmark our results against a local government average. Unfortunately, what Ask Your Team does not yet allow is an easy ability to trend your results from the previous year. They are working on that, and they hope that it will be available within the next 6 months. So we would have it for our next employee engagement survey, but at the moment we have to do all of that by hand. Okay, so our participation rate we were very pleased with, so a little over 84%, up 1% from last year and 13% higher than the LG benchmark. So that was good news. The more people that you get filling it in itself is actually an indication of engagement, because it's normally your unengaged people who can't be bothered filling out the employee engagement survey. So just as a reminder about how the scores work, Ask Your Team uses a weighted average. So that means for each of the 74 assertions in the questionnaire, people can choose from either a don't know face through to a angry face, right through to a delighted face. And that gives you the percentage. What that means is that if you have all of your people click agree, your score for that particular assertion will be 80%. If half of your people click somewhat agree and half of your people click strongly agree, you will also end up with 80% as your score. Ask Your Team also gives you a colour range based on your score for each assertion. So what you'll see here is to get into the green, you need 84% or above, which means that most of the people completing that question are saying that they strongly agree with the assertion. So it's actually very difficult in a Kiwi context to get to the green category, because most of us are a little more, yeah, we agree, rather than being very strong in our agreement of things. So yellow means good, orange means this is an area you potentially should be looking at, and red is a definite area for improvement. So our overall result was a very solid 72%, so up 1% from last year and 9% higher than the local government benchmark. So that last year we were 8% higher than the local government benchmark. And remember, the benchmark can change based on the councils filling it out more recently. So overall, as officers, we were very pleased with that result. So here we've got the top 10 rated questions. So you'll see that lots of those fit into the culture category. And so what we've got in the first column there, starting with the 86% is the score, that's this year's score for each of the assertions. The trend is how much that score has changed from our score last year. So in that case of the first one, I understand clearly how the things I do affect the ability of others in my team to do their job. We were up 3%. So last year it was 83, this year it's 86. And then the benchmark comparison is saying this year we are 5% higher than the local government average. So the local government average in this case was 81%. So you'll see that all 10 of our questions are higher than the benchmark comparison. In fact, all of our questions in the survey, all 74, rated higher. So not one was below the local government benchmark, which was also really pleasing. And you'll see some of these questions are significantly higher. So I'm confident that the exec is leading us in the right direction, 14% higher. Performance of our council is better than that of similar councils, 13% higher. And the actions of our exec team are consistent with the council's values, 11% higher. And then a little further down, I have regular performance reviews and receive effective feedback, 14% higher. Also, one that I'm particularly delighted with, the health and safety and wellbeing of people in the council is appropriately reflected, etc. 80%, which was our strategic goal in our health and safety space, so 1% up and 7% higher than the LG benchmark. So some good news there. What we like most about working at the council, so in addition to the 74 rated questions, we have 2 free text questions. The first one being this one, what is it that you like most about working at MDC? So some really positive comments coming through. The people, positive, supportive, family-friendly culture, good banter, good team environment, the PD and training opportunities that we offer, serving the community, progressive and forward-thinking organisation, which was nice to hear. The leadership, so that's Richard and the wider exec team, plus the people managers across the business, and free swims, which fits in with our wellbeing, our health and safety and wellbeing program. I'm happy to take questions as we go. Just butt in if anyone has questions. So bottom 10 questions, not surprisingly, pay at the bottom, 53%. So down slightly on last year. I should also explain the The trend analysis for an organisation of our size indicates that if a score is plus or minus 3%, that is not statistically significant, i.e. it's not really something that you should read too much into. If it's plus or minus 4 or more, then they suggest that that's something that is possibly a more robust trend and something that you should be interested in. So although it's slightly down, under the survey rules, it's not statistically significant. We are still slightly ahead of the local government benchmark, though I would suggest, given that we carried out this survey at the end of February and the first week of March, the world has changed significantly since that time. So we had originally, in that sort of week or two after the survey finished, we'd started to workshop the results and think about what we might do. And we particularly workshopped that pay one. And then within the last sort of 2 months, we've gone out and announced a salary freeze for our staff, which is not something that we would have ever imagined doing at the time of completing the survey and the initial sort of workshopping of the results. So that's one that we will need to keep an eye on in the coming months and years. We have been relatively conservative in our salary increases for the past 3 or 4 years, and we'll just need to keep a close eye on what's happening in the market to make sure that we stay within the market and our people don't slip behind.
Francis, if I could comment on that, please. Yes. I don't think I've ever seen an employee survey in any organisation where people thought they were paid too much. And I'm not saying that in a cynical way, but I think if you combine that question and then you look at the very strong leadership results in the top 10, I think there's a balance there that says people obviously trust that the decisions are being made correctly for them. And as you say, there's a pay freeze on anyway now. So as we go through and get out of this current situation, that may lift a little. But it's a very difficult one to improve much on.
Yes, thank you for that, John. Absolutely. I've never done an engagement survey where that question isn't the lowest rated. Everybody wants more pay. That's the way of the world. But when this came through, because it is our lowest question and our people are telling us that they want us to look at that, we did take it seriously and we will continue to do so. And we will continue to look at how we support and appropriately reward our staff.
Absolutely.
Yeah. Thank you.
Can I just ask a question there, Francis?
Yeah.
While obviously things have changed with recent events, and another one that would come out a lot more strongly now, I imagine, and I didn't see a question on it, was the feeling of job security. I think that's really important at the moment, as opposed to, I think people are grateful that they know they've got a job, even if they know they're not going to get a pay rise in the next 12 months.
Yes, thank you, Alison. There's not a specific question around that in the survey, but when we talk to staff about the salary freeze, the overwhelming feedback was positive. So people being grateful, as you say, that council is doing everything that it can to avoid redundancies as a result of COVID-19. And we made sure that we looked after staff through the lockdown. So it will be interesting to see what happens from here. Already we're seeing a difference in terms of our ability to recruit people and the salaries that people are asking for. So it is having an immediate difference. So the other questions there, although they are our bottom 10, starting at 61% for people being held accountable for hitting deadlines. For lots of organisations, they would be delighted to receive 61% for that. And you'll see, you know, even as we get further down, the benchmark comparisons are at times considerably higher than our neighbouring councils. So that's good news for us. It does mean that some of these business processes are where we are putting our time and energy, our thinking. The meetings one was one that came out lower last year as well, and we've done quite a lot of work on that over the past year. So it was really pleasing to see a 4% rise in that score, that our efforts are actually making a difference there. Okay, and then in the free text, the second free text question, what would people like to change about council? Very similar results to what the other questions were saying. And, you know, nothing of concern, nothing that was a surprise to the executive team, and areas that we will continue to work on once we're kind of through this immediate emergency and life looks at least a little more normal. So this is going to show you the trends from our 2019 results. So we had 7 questions or assertions that were statistically significantly higher. So project management, learning from mistakes, goals and objectives that are aligned, identifying opportunities to reduce costs, supporting people to come forward with new ideas, impact of the environment. That was a really pleasing one based on the work that our sustainability group has been doing, and then the meetings one, which I've talked about. So all of those things are very encouraging. We had 2 questions that rated statistically lower than last year. So the first one being that we actively gather feedback from ratepayers in the community and use this to improve our services to them. Now, we do actually do this, and this group sees the results of that in terms of the questions that we put out to the public, but perhaps we don't do a good enough job about talking about those results wider within council. So that's potentially an area for us to look at. And then this last one, we have clear and effective systems for dealing with intimidating behaviour and workplace bullying, which are applied equally to everyone. So a 7% drop, which sounds like a lot. And when I was thinking about this, I looked at the last time that we reviewed our harassment and bullying policy, and it was during 2008, and we did quite a bit of communication around it at the time. And that was sort of in the lead up to the 2019 survey. So I suspect that that influenced that very high score of 75% that we received in 2019. At the time, that 75% was 15% above the local government benchmark, which was extraordinarily high. So 68 is still above the local government benchmark. And the policy is due for review actually this month, although we might delay it a little bit to get ourselves time to get out of the pandemic mode. And so we will be doing lots more communication about that this year, but it's probably just a reminder to me and my team that we need to make sure that our processes are, that we're still communicating about them, even when we're not actually updating the policy. Harassment and bullying is not something that I lose sleep over at MDC. I certainly have worked in organisations where it has been a real concern. But I think the rest of the results in the culture survey should give some reassurance that actually the culture is very positive overall.
Francis, could I just comment on that, please? That score is actually not a bad score, as you say, in overall terms. It's just the trend, I think, that's perhaps something to watch for. But is there any split across the organisation in terms of where that's identified, or are you able to identify that from the survey?
Yeah, that's a really good question, John. And yes, we have a couple of pockets of teams that rated that question slightly lower than others. We were already aware of that and are working with those teams. So there were no surprises in the breakdown of that particular score. Right. And I do think that the general thing is around the general communication of the policies.
Yeah, sounds like it. Okay, thanks.
Okay, so this was the where to from here slide that we used at our all-staff meeting on the 18th of March. Which was, we have the results available, we'll be working with your managers, we're on it, we're heading off in the direction, and then COVID-19 came along and that all ground to a halt as we shifted our attention both to looking after staff through the pandemic, but also me and my team were heavily involved in the welfare response and actually looking after our community through that time. So, so to be honest, we haven't yet moved forward into looking at what a new action plan for our organisation looks like. As we've been saying, the world has shifted significantly. It doesn't mean that we throw all these results out, but it does mean that we kind of start with a fresh pair of eyes and look at what our priorities are as an organisation for the next 3, 6, 12 months. So I'll stop sharing my screen and happy to take any further questions.
Councillor Casey.
Yeah, thank you, Mr. Chair. Thank you, Francis, for the presentation. The one question I have, and it may be unfair, so please push back, is have we ever laid our surveys across the public sector, sorry, I beg your pardon, private sector, at an organisation that is approximately the same size? Is that a fair thing to do, or understanding that we are in local government, we're a slightly different beast?
It's something that we actually talked about a number of years ago with IBM and the Connexa survey, because that one did have the ability to, you had to pay extra, but you could benchmark both against a local government and a private sector of similar size organisations. And we were keen to do that, but only once we'd beaten the local government benchmark, which we did, and we were going to do that in the year before IBM Connexa shut down. Yeah. With Ask Your Team, it's slightly different, and they don't offer that benchmarking in quite the same way because they are a relatively new survey. They have sort of segmented the market very deliberately. So all of local government is just at the moment being benchmarked against local government. But it's certainly something that we have raised with them, and we'll be looking in terms of their development as a product, that ability to do that in future years, because we're interested as well. We don't just compete against other councils for staff. We obviously compete in the private sector as well to attract staff to come and work for us.
I am conscious I didn't want to get too much into operational matters, Francis, but yeah, just want to pass that by you.
Good. Councillor Marsh. Yeah, Hamish, if you could turn Phil on, please. Thanks.
Thanks, Mr. Chairman. Just a quick question, and again, thanks to Francis. There's so much information in that full report. It's fantastic. Just a question or comment, please, in regard to the governance team, and just wondering whether there were any thoughts given as far as the employee survey was concerned around some questions around governance. Most of it talks about our executive team, and I do make the comment that yes, the CEO is our employee, but then all the other employees are his. But really the only part in there is around the leadership giving clear vision and clear strategy. And I was just wondering whether there were some points in there that we could insert around the governance team.
It's a really good point, Councillor Marsh, and not something that I'd actually ever considered. It's certainly not something that's standard as part of the local government Ask Your Team results questionnaire. But if this governance team wanted some feedback from staff about their performance, then I'd be happy to insert a question into next year's survey.
Quite often we're just seen as that cloud that sits down the end of the building. And I'm from a team point of view would certainly look forward to seeing something that we could insert in there, and whether we could then put that on a time frame scenario so that it fits with our triennial.
Yeah, sure. Your Worship.
Thank you. I endorse those comments of Councillor Marsh. I think it is something that we need to work on amongst the governance team. We have raised it in the past about how do we performance review ourselves. There hasn't been a lot of support to do that amongst the team, but I think it's a really good opportunity to review that.
Okay. All right, any other questions or comments for Francis? If not, we've got a recommendation on page.
So move, Mr. Chairman, that the Audit and Risk Committee receives the results of the 2020 Employee Engagement Survey.
Thank you. Do I have a second? Thank you, Councillor Short. I'll put the motion. All those in favour, please raise your hand. Against? It's carried. Thank you very much. Right, we'll move on to next item, which is our third quarter report to 31 March 2020. So we'll pass to Amanda, I guess, to take us through this one. And note, Amanda, you've made some amendments to the layout, so we'll welcome comments from members of the team on how they view those.
Councillor Campbell, just before Amanda starts, I've got the third quarter report that I can do as a share screen if councillors would like to do that. If you've got hard copies or other screens of your own, we don't need to do that. I just have it available if there's a...
That might be useful because it is quite a wide... Yeah.
Okay.
So that'd be good. Right, Amanda.
Amanda, do you want to introduce it first, or shall I go straight to a shared screen and talk through it from there?
I'll give you a quick overview and then maybe we'll pull up the screens and just see if there's any questions, and that may lead some of the discussion. Thank you. So yes, this is the third quarter report for 31st of March. 3 more months to go before we start the new year. The results are fairly, they're fairly positive. I've kept your graphical indicators at the front. The overall financial position performance at the moment is that we are $500,000 behind our budget, which on a budget of 44 to 45 million revenue is a really good overall position, 1% variance. So that's really positive. However, if you look into the detail of that, you can see some quite large swings or variances. The main ones to note, which is not a surprise, I'm sure, is that we're behind in our development contributions across the organisation. We're behind in our other revenue, particularly user fees, which was the majority of it is the assumption that we had originally around the commercial waste fees that we were going to charge should that have gone ahead. That has an offsetting reduction in revenue, which in expenditure, which we haven't incurred the revenues, we haven't incurred the expenditure, so that's almost a nil effect. We've got the increased depreciation as a result of our revaluation during the year. And we're currently lower in our operating expenditure, general operating. The main contributor to that is the commercial waste costs of disposal. We're not getting the revenue, we're not getting the volumes, we're not disposing of it. And the other portion of it is maintenance across mostly our community facilities. Some of that is timing and some of it is maintenance decided, reassessed as not being required at this point in time. So, a fairly positive position, but that's our major movements. I have set it up to show you the funding impact statement. That's a statement that is often only looked at year end, and I didn't want that to become a surprise at year end. So that's now included in your quarterly reports as you go forward. And then you've got your individual breakdowns on your activities, talking about the operational spend first, then looking at the section around your capital projects to see how they've performed. Then we move into the balance sheet to have a look at our debt, our receivables, and our payables. So that's your very quick overview. Happy to take you through more detail or to go through and answer questions as we go.
Okay. I'll refer to the committee. What would you like to do? Should we go through it page by page like we normally do, or just take general questions in regard to the whole document as a whole? Anybody have a preference?
Suggest page by page, and that way, if there's nothing, we can just keep moving.
Okay. All right, we'll do that. And so, Hamish, if you could put it up, and we'll work our way page by page, and we'll take comments on both the layout, the format, and comments on the any amendments that have been made since the last report, and also the content at the same time. So yeah, starting there with well, it's page 33 in our papers. That's the key indicators. I think as Amanda mentioned, yeah, capital expenditure well behind where we were hoping to be, but operational side of things is a bit closer to the budget. So, and debt is about where we expected it to be. Anything further you want to add, Amanda, or any questions there?
No.
No, all good. Right, next page. So this is a new one that hasn't been presented before, but standard profit and loss format with the numbers rather than graphs. So I think I'm quite pleased to see this one here. It explains it's a profit and loss that is in line with what we produce in the annual report at the end of the year. So it gives a good indication where we're heading. And as Amanda mentioned, you can see there quite clearly that development contributions are quite a bit behind budget, plus other revenue, and the depreciation being up. So the 500,000 variance in operating surplus, as Amanda mentioned.
Mr. Chairman, can I just raise a question in regards to the development contributions being lower than expected? Can I ask the question about what is the key reason why that is, given that we're constantly hearing we've got our growth and the number of consents coming in? You would have thought that it would have been the reverse of that. Can we just have an explanation for why it is lower?
Sure. Shane, are you able to help there?
Yeah, a lot of it's we've entered into a number of development contribution agreements that spread the payment of those contributions out over a period of time. So prior, when those budgets were done in the LTP, there was an assumption that development contributions would be paid at 224 or co-compliance certificate stage. There's a number of developments now where that's not happening. So the money's out there, it's just not being collected in one lump sum. It's being collected in various installments from developers. So it's not such a burden.
Thank you for that, and I assume that was the answer. So what I'm thinking is, and I certainly support developers being able to spread that out so that they pay their DCs as the property is sold. So when we do our planning for the next financial year, will we take that into account so we don't see it as a negative all the time?
Yeah, we definitely will have to do that. We'll have to model our income on more what's happening from an actual perspective rather than what we were doing previously. So.
Thank you.
Okay. All right. I'll just before you move off that page, I just thought we should highlight that line at the bottom where it says gains losses on the revaluation of property, plant, and equipment. Amanda mentioned the large increase we had in the valuations this year. So a 57 million increase in valuation of infrastructure, mainly compared to the budget we had for 16, which was in line with the previous year's increases. So it shot up substantially this year, and that's had an effect on the depreciation line above. So that just explains that one a bit better. All right. Funding impact statement. Amanda, this is more sort of the cash in and out, is that right?
Yes, thank you. It kind of is. What a funding impact statement does is look at what you're spending on and then how that particular section is funded. So it breaks down how your operating spend is funded and then how your capital spend is funded. Yeah, it's not necessarily cash because some of it's reserves and investment, but it does take out your depreciation. So yeah, I suppose you could say it's cash. It's one interpretation of it, yes.
Yeah.
It's looking at what you're spending and the way that we're funding that particular section.
Yeah, that's true. So I guess it highlights where all the money's come from and gone to. So we can sort of split out between how much we're collecting in rates versus how much we're collecting in from borrowing and how much we're taking out of reserves. So that's the idea of how we're funding everything.
If I can, through the chair.
Yes.
More a comment really for Councillor Hadfield, who's probably the new councillor. Can Amanda just give us a breakdown, please, of the interest, dividends and investments? And given some of the other councils around the countryside who have ports and airports and those sorts of things, I mean, their income drop would be absolutely huge from that affecting their funding impact. Can we just have a breakdown of where ours are coming from?
I would have to come back to you on that because off the top of my head, I'm not au fait with that particular part. Shane, do you?
Yep. So we had Civic Financial owned a building in Wellington.
Oh, that's true.
And we have shares in that company. We had shares in the building. It's historical way back. So we got part of the, I think it was a couple $100,000 paid to us as our portion of the money from the sale of that building.
Okay.
That's non-recurring, obviously.
Sorry?
So that'll be non-recurring, obviously.
Yeah, there's no more buildings to sell, unfortunately. That's a one-off.
So we have no other investments? I thought we had a forestry block as well.
No, once that was harvested, council made a decision not to reinvest back into that, so we don't have any forestry interests anymore. We do have investments by way of borrower notes in LGFA, and so they are financial investments in that company.
Thank you.
Okay, we'll move on to the next page then. Activity summary. So Amanda, this one you've sort of combined. Well, we've now got one page for community facilities and one page for infrastructure, and we've replaced the graphs or the numbers, left the comments all the same. What else has changed?
Yes, that's kind of the main gist of it. I've also brought in, I'm trying to remember whether it was there last time actually, the forecast. So the focus here is different layers. So in the community facilities, we've split it out to the layers below it, which is library, halls, Makino, giving you a bit more information around those all on one page, so you're not flicking back and forward when it kind of ran out of room on the old format. And the focus of the commentary is to say where we are now, but also how we think we're going to finish at year end, so that you get an idea whether any variances now are of concern or whether we think we're going to pull those back and meet budget at year end.
Right. Okay, thank you. So looking at the numbers, the revenue for the pool was down more than expected, but the expenses were as well, so seem to be tracking okay overall with the pool. Property is running behind, and libraries would be behind where they were expected to be. Otherwise, everything else is pretty good there. Any other questions on community facilities? Anything on that page?
Yes, I have a question, Mr. Chair, if I may. Look, I just wanted to touch on, I actually, I had some conversation with Amanda about this yesterday, but I thought it was good to raise with the committee. I was interested in relation to property, the costs that haven't been factored in for our Bowen Street Archives property. And part of the reason that came up for conversation was actually further in our report, where we have a list of loans. And I was asking about one that's tagged to the coach house for 1.78 million, I think. But in fact, actually that was money that was spent on redeveloping the archives property. So I've got some questions about how much debt is hanging over that property. And obviously some operating costs that haven't been factored into the budget. And I'm aware that we're also, we have that property earmarked, I believe, for disposal in the LTP. So I was just interested in some to get some feedback and comments about the, where the situation with that particular piece of property is up to.
I can comment, Mr. Chairman, just on aspects of the redevelopment of that property. Yes, there is a loan in place for the redevelopment, or when that property was redeveloped as an archive. There is a commercial lease in place with MWLAS, and yes, it was listed on our listed of properties to be disposed of. We haven't actively marketed it. We got some comments back from MWLAS themselves, not in favour of us disposing of it. So I think that is a question that we need to put back to council as part of our next long-term plan process. In terms of the unbudgeted interest costs, Amanda can probably expand on that, but when we were looking back, that was an error in the budgeting process, unfortunately, when we put together the 2018-28 long-term plan. So the requisite interest cost wasn't included in the budget to offset against the cost of the loan. So I'll just hand over to Amanda to talk to that in a bit more detail, but it was discovered after the fact. So Amanda and I weren't aware that that was actually the error in the budget until more recently. So that's as the cost of that has had to sit within their budget line.
Yeah, so through you, Mr. Chair, as Brenda's mentioned, it was the cost of interest was not budgeted. And having had a little dig around, we kind of went, it's an error in the budget, but actually we were supposed to have sold it, so there wouldn't have been any interest costs, because the assumption is when we sold the property, we would repay any outstanding debt and therefore there would be no interest. Because we haven't sold the property, we are still receiving the interest costs, and in essence, Bowen Street is not covering the actual costs of the loan via the rental. And it's something that I was going to have a look at the next week, is to see how much loss we're actually generating in that area. It is a commercial lease, and therefore we treat it for tax purposes, so we keep it quite separate. And the loan that you did ask about, the coach house, is poorly labelled. I'm going to relabel that to say 40 Bowen Street, because it's not the coach house anymore, it's 40 Bowen Street.
Yeah, thank you. I guess my concern was about whether the level of the commercial lease is sufficient, or whether in effect our council is subsidising the other parties in MWLAS. And I guess just revisiting that and getting some more information as you dig into that will be really helpful. Thank you.
Good. Okay, any further questions to do with community facilities? If not, we'll move to the next page, Hamish. Thank you. Right, this is all, this is regulatory. Somewhat smaller numbers in general, but building control, running a expenditure is a bit higher than expected. Alcohol licensing, that was one that caught my eye. Revenue substantially down, expenditure about the same as expected, so it's costing us a bit of money. What's the story there, Shane?
That's the issue when you have government fixed fees and charges. Yeah, we a little bit of mercy for that. And we haven't seen the amount of licenses, special licenses come through that we didn't be previous.
Okay. Anybody got any questions? Yeah.
Yeah, I raised that at the last quarterly audit and risk, and yeah, it was forecasted to finish budget at that point on time. So yes, again, I have the same doubts as you've just mentioned.
Okay. All right. Any further questions for regulatory team?
Probably just
yep.
Thank you, Mr. Chair. Just in terms of that alcohol licensing, I'm just wondering if our expectations around that going forward in the current climate might not be quite overstated in terms of revenue.
It might be, but the revenue from our alcohol licensing does mainly come from all the events and all the other special licenses and that. It's easy to work out our fixed revenue and that, because the amount of venues that have licenses within the community isn't great and doesn't change substantially. It's all of those one-off type events. So you're probably quite correct. Let's just see where we go. But we may have to reforecast the budget next year to suit just what's happening in that event space and consequently revenue from alcohol licenses.
Okay. Right, we'll move on to the next page. Infrastructure. So we've combined these. We used to have a page for each one, each department, but now it's pretty much summarised in on one page. So a bit of consolidation here. We can see roading 1.5 million behind where we're expecting to be. The others smaller amounts, but basically everything's behind. Will that be correct, Hamish?
Yeah, thank you, Mr. Chair. I think if you look at those in context, development contributions we've talked about, the significant increase in depreciation and the knock-on effect of that, and then the in-out for the expected revenue and expense in the solid waste area. Those three items in themselves account for the vast majority of the variances on throughout the activities.
Yeah. So what's the bulk? Just the roading one, for example. That's quite a substantial variance. Only we're pretty close in revenue, but we seem to have a lot more expenditure. So what would the reason be for that? You've mentioned in the comments.
The expenditure is largely the additional depreciation cost that's been booked
right.
In.
Okay.
Yeah. And given the value of the roading asset, obviously there's a disproportionately high effect in that area.
Yeah, fair enough. Any other questions? If not, we'll move on to the next page.
Just quickly through the chair, I'm interested just in the comment down the bottom and the fact that forecast to finish the year with a capital spend of 20.4, which will be 10.2 under budget, and whether we're still confident of that.
Yeah, and through Mr. Chair, that is the updated figure as at the end of March, and you're quite right. We'll be looking at reforecasting that at the end of each month now and June, and that will no doubt have an impact in terms of the contract delays that we've had across the board as a result of the COVID shutdown.
So that's right. Of course, we need to remember these figures at the end of March, which was before the COVID effect kicked in, particularly with the library and the pool, and then the slowdown of roading work. So yeah, the real effect of this event won't be seen until our next report. So
yeah, just on that, Mr. Chair, in terms of that COVID issue, I guess it's less affected in the water supply and wastewater space. The wet industry is probably down a little bit in terms of production, but still using water and sending us trade waste. We started accepting AFCO waste in the mid-late March, which has continued throughout. And obviously the grass is still growing in the wastewater space, and that's a revenue stream as well. So there are elements that haven't been affected, which is a positive. And in terms of the capital spend, some of that will be affected in terms of contractors stand out.
Okay. Councillor Casey.
Yeah, thank you. Just going down to wastewater and in particular nursery, there's a loss generated of about 120k down there on that last paragraph there. Hamish, it might seem a bit harsh, but just some concerns around that. And my concerns are not on the loss. My concerns are actually, are we actually meeting our planting strategy in regards to mitigating wastewater to land effects? And just wanted to get a sort of sense of state of the nation from you on that one.
Yeah, so I can start, and Brent may be able to jump in. Essentially, the planting program that we have in place for the wastewater treatment plant and the buffers is continuing. It's had probably a few bumps in the road over the last couple of years. but there is still very much a program of ongoing buffer planting development. That requires ongoing maintenance and enrichment planting as well. But there have been a number of changes at the nursery, and it has been a subject discussion with council as well. There is I think, Brent, a workshop discussion at some point to talk more in depth around that.
Yeah, I think so. I think there's a couple of other councillors with some concerns, and certainly how we're sort of financing that loss too, Hamish. But again, I think that's, if I may say, one for the full team to get our heads around, because that's really quite a critical aspect in regards to our, as you know, our wastewater treatment processes. So hence the voice in it this morning, Hamish.
Thank you, Councillor Casey. Yeah, it may be appropriate, I don't know what other members think, for the plant nursery to be shown there as a separate line, while it's is sort of part of the wastewater division. It is and it isn't. So I don't know what people feel about perhaps reporting that as a separate line. It might be useful for us, I think.
Mr. Chairman, a couple of comments I can make just to follow on from Hamish as well, and certainly support if you would like to see that as a line item. We can work with Amanda to make sure that there's a bit of clarity around that, so you can understand what parts of the business are actually funding that element. I mean, primarily it's just for the wastewater treatment plant, but obviously there are, it also grows plants for our parks and property area for planting as well. One of the discussions I've had with the CFO, and certainly she has highlighted a few issues around how we do our internal transfers. So to ensure that the income and expenditure of the nursery is a lot clearer, because obviously there is some funding that should move across between accounts within our internal financials in order to show where the expenditure actually sits. So we're doing some work on that, and we've also undertaken an internal audit as well, which will be bringing the results of that back to the full team. So we've got quite a bit to cover off in our briefing back to the council.
Okay, that'd be good. Yeah, well, it's something I'd like to see, I think, is a separate line. Would anyone, would others like to see the same thing? Or maybe Amanda, you could think about doing that for future reports. That'd be good.
Yes, no problem.
Okay, thank you. Right, next page, which is support services.
So, Mr. Chair, could I outline what this area is? Because I
Yes.
don't believe it's a section that you've probably seen before.
Sure.
If you don't mind. So support services is what we often recall as our corporate services. It's our back office functions. For our support services, it's not actually, because you'd normally think that's Shane's area, being corporate type area, but this is actually any area that has staff. So the infrastructure support area there, that's all of Hamish's teams, all of Brent's teams and people and culture. So how it works is we have what we call the support services, where all the salaries are paid, and then the costs of people working into these activities. For the a chunk of our staff, they use timesheets, so it actually allocates the cost of their time into the activities. And for the rest of them, like myself, I'm an overhead, and I'm allocated out via an overhead process. During the year, at the beginning of this year, I made the decision that we wouldn't allocate out the costs in these areas as per actuals, but we'd do it as per budget, so that you could see if each of these areas was under or overperforming. If you don't do that, and you just, the normal thing would be to spread whatever value is in this at month end, then the activities that you look at will have a fluctuation, ups or downs, on their support services fees, and you kind of don't see it. So that's why I've split support services out. And then your other activities, it was just me making a heading to put the ones that didn't fit into any of the other headings. I hope that helps.
Okay. Any questions on this page?
If I may, just through the chair, it's just your governance team, I think it was. No, the emergency management comments down there. I brought up at a previous council meeting in the fact that it would be good or I see the advantage of actually rating accordingly to central government costs and what effect that has on our rates. And here's a classic example with the emergency management of something that's been instigated by central government, which is costing our balance sheet or profit and loss.
Mr. Chairman, if I can make a comment on that. I think we need to be careful in saying that it's all down to central government. Emergency management is a core function of local government, but yes, the COVID-19 response has meant that some costs have fallen on us. Those are mainly associated with welfare and the welfare response, and those costs are recoverable from central government.
Okay. All good. Right, move on then. Okay.
Mr. Chair, sorry, I did have my hand up.
Sorry, I couldn't see you there. Apologies.
Of course, apologies. I just wanted to pick up on the lower than budget revenue from shared services and infrastructure support. Is that the full amount of the variance of 461, or what portion of that variance is lower than expected revenue from shared services, and why are we getting lower than expected revenue? I thought that would just be a basic contractual obligation.
I'm happy to start with part of that. Amanda, please jump in as well. Councillor Humphrey, I think you're right that it should be a straight transaction. There's identified a work program with an agreed budget with the Rangitikei District Council. We do the work and charge the time. What we have seen in the last 12 to 18 months, they've had some changes on their end, as you'd be aware, with a new infrastructure advisor and a new chief executive. One of the concerns that we have had is changes to the work program during the year. So works that we had originally planned on delivering and resourced to deliver were either deferred, delayed or cancelled. And so we spent quite a bit of time going around in circles, working through a refined or a new work program. And that has resulted in reduced revenues from Rangitikei District Council through that shared service. It's something that the two chief executives and myself, between Peter and Richard and myself, are well aware of, and looking at the implications of that going forward. And said that there is still a significant amount of work that needs to be done on the Rangitikei side, and we continue to work through with their senior staff around who and how that's going to be delivered. Amanda, did you want to pick up the comment around the numbers?
Yes, so the revenue reflected is directly the shared services revenue that's below budget. So the 461, it's 458 of it is the shared services revenue. That is a direct impact. On the expenditure side, there's been some staff vacancy in there. The staff personnel cost is slightly lower, and some general spend in, I'm just having a quick look at the budgets across some consultants. So lower costs across, but it is predominantly the shared services revenue that you are looking at for that 461.
Okay. I guess that's interesting. As we move into, I don't know when that shared service contract is next due for renewal, but I guess again it's those issues of equity and and in terms of the overheads that our organisation continues to have to manage. Is it a fair split and equitable share of cost and return for services delivered? Not a question I expect an answer to right now, but just as we look forward.
Okay. All right. Anybody else? You'll have to excuse me on the presentation on the screen. I can't see everybody's hand. So if I miss you and you want to raise a question, please just sing out. Right. We'll move on to the capital expenditure report. This is just line by line for every project, capital project we've got on the go. I had a comment here. I was wondering about the traffic light system you've got there, Amanda. There's a lot of greens, but the green is, well, according to the scale at the bottom, is less than 5% greater than budget. But in reality, the bottom line, for example, is we've spent 15 million of 24 million, which is the 36% variance. So I don't quite understand how that can be green.
Yeah, the traffic light system gives us problems every time we do this report. It's a conditional formatting of Excel, and it does its own little things. And it is a system that I was going to put through the rest of the report and spent quite a bit of time, and then decided that kind of wasn't worth the effort. What it tends to think, and it's got this, is that if you are behind expenditure, then it's a good thing. But for our capital spend, that's an interpretation, and yeah, I mean, I can tweak it. At the moment, it's not pretty. It's not quite working right.
No, okay.
And the question is it actually giving you useful information?
Well, the report does. It was just the traffic lights didn't quite match the
Yeah.
the
I'll
thing.
relook into the formatting on those as well.
All right. So yeah, obviously overall there's some significant variances with lots of projects. And at this stage, yeah, we were 30 at the half year mark. We were at the 3/4 year mark. We're 36% behind. So obviously with the next quarter, it's going to be substantially more than that. So it looks as though we're going to have a fairly substantial carryover for next year.
And Mr. Chair, if I could mention about the forecast, although this is results of 31st of March, this report is physically put together in April. And by that time we were, quite a long way through our shutdown. So staff were doing the forecast with the information they had at the time, which was that we knew we were going to have this lockdown period. So it definitely isn't a report that was done without COVID impacts in mind. They definitely did have it in mind at the time that they did it. And of course, as time progressed, it'll be tweaked more and more, but they have taken the time to think about what was happening at the time with regards to the COVID impact.
Okay. All right. Does anybody have any questions on specific projects here? No, they are what they are, I guess. Yeah, and we're just subject to economic conditions, but okay, we'll move on then. So the tail end now, we've shifted the key performance indicators to a separate section at the end, separating those out from the financial report. So I think this is probably quite a good idea. There's a substantial number of key performance indicators we monitor. You did tell me the number, Amanda. I can't remember off the top of my head, but there's a lot of them.
Yeah, it's on the front. Oh, you have to add them up at the front. The little grid of the very overview is still sitting within your key indicators right at the front.
Right.
With the overview.
Oh, okay, right.
Yeah,
so this is a summary by, so now
this is the more in-depth summary, yeah. So if you wanted a very quick glance, you can still look at the dials.
Right. Just a question on the process for setting the KPIs. How are they set? Who sets them? Are they required done by audit office or legislatively or done by us or both?
So through you, Mr. Chair, these are set at the time of the long-term plan. They're set as part of that project. And my understanding is that the budget managers and the general managers in those areas identify them, but they do come forward to you, to council as part of that process. Is that how it works here, Shane? That's how we've done it before?
That's how it works.
Yeah.
Some of them are guided by legislative requirements, such as there are legislative timeframes built into a lot of what the regulatory team does, for instance, planning. So we base our KPIs in and around that. We don't necessarily duplicate them, but the rest are agreed on by the general managers and their team and then taken to council for inclusion in the LTP.
And Mr. Chairman, there are some mandatory measures as well, which we have to report against, and they primarily sit in some of the infrastructure area. So yeah, it is they are set during the LTP time, and the key thing is they also have a fair bit of, as you'd expect, input from Audit New Zealand as part of our LTP development process as well. So there's often a bit of debate around how we define things. Yeah.
Okay.
And there's also, Mr. Chair, there's also an NZTA influence around the roading metrics as well. So there are external factors, but yeah.
All right. No, that's good. It's just worthwhile, I think, keeping in mind as we lead into the next LTP review, that there's an opportunity perhaps for us to review and amend, if necessary, any of the particular KPIs that we want to see reported in this report going forward. So yeah, we'll keep that in mind, and as those aspects of the LTP come through, we'll keep an eye on those. All righty. Any questions there on any of the KPIs?
Mr. Chair, just two things I'd like to pick up on. One is really linking back to Francis's presentation around staff engagement, and it's in relation to the customer perceptions survey. Actually, our community feel like our staff in terms of how involved they are with decision making, and so there's an interesting correlation for me there that I think might be worth exploring in a little bit more depth, and I think that's a space that we've probably consistently struggled in, not for lack of trying. We're seeing some really good innovation coming through in terms of how we're trying to engage with our community, but it just interests me that those spaces seem to mirror each other. My question was actually just in relation to stormwater and wanting to pick up on the complaints, and just noting that actually we're coming out the back of what's been a fairly dry season, obviously heading into a wetter season. And I think if I look at the CapEx report as well, and the extra money that was allocated but that's needed to be spent in that stormwater space, again, so the questions, Hamish, should be about what drill down have you done into? Are there any trends or themes or consistencies around what's driving that increased level of complaint around stormwater, and what does that mean as we look forward, from a 10-year plan budgeting perspective?
And through you, Mr. Chair, thank you, Councillor Humphrey. I had exactly the same thoughts when I saw this particular one, and I thought we've had one of the driest sort of years and summers for quite some time, and yet the stormwater complaints. I have drilled into it, and I'm looking at each of the 50 complaints. Essentially, the stormwater KPIs are a bit of a catch-all in terms of anything that doesn't fit into roading, water or wastewater tends to land into stormwater. And so there are a lot of rats and mice, if you like, which I would probably question as to whether they are a legitimate stormwater complaint or issue. But that's sort of where they've ended up. What we will be doing is reviewing all of those as we head towards the year-end reporting. And if there are things that have been captured in there which are probably not a stormwater related issue, we'll be looking to move those out.
Okay.
Mr. Chair, may I ask a question?
Yes, John.
Just looking at the roading, the year to date is 14 crashes with 1 fatality and 14 serious injuries. The target is a decrease on last year's 3 and 18. Is that a yearly target or a year to date target, please? The 3 and the 18, I mean.
That is through Mr. Chair, that's a year to date target as at 31.
Okay, good. So that means that we're actually ahead on both. We're doing better than expected on both.
Yes, correct.
Yeah, good. It's just if it was a yearly target, it was not so good. That's all. Thank you.
Okay. Any other questions on the KPIs?
Stuart, could I ask a question on
yes,
the
Alison.
stormwater, please?
Yep.
Thank you. Hamish, I wonder if in the 50 complaints around the stormwater system and the notes on being a dry season, do you think any of those complaints might have been about the physical works? For instance, up West Street with a lot of traffic disruption and possibly to households as well. Do you think complaints about the actual physical works could have been put into that line?
Through you, Mr. Chair, I'd have to go back again and review it line by line. Like I said, I did check through it, to check the types of them. Short answer is yes, that's likely, but I wouldn't want to say that yes, there are specific complaints relating to West Street works, for example.
Thank you.
Okay. Any other questions? No. Okay. All right. We'll move on. The final. Oh no, it's not final yet. We've got the statement of financial position. Perhaps I suggest, Amanda, just that be moves up to in behind the profit and loss, or the what do you call it? The funding statement up the top. It'd probably be better if it was aligned with that. But I think our financial position is still pretty good. We should survive another day.
If I may, through the chair, can I just get an update from Amanda, please? The provisions there under the liabilities, I see that still sits pretty much, well, it is exactly the same as the previous year. Given your comment before of being 37% behind, just whether we should be provisioning anything on our current portion of our liabilities.
Amanda, you still there?
Sorry about that. I was mute. That was a bit silly.
Right.
Yes, the current portions I have noticed have actually been done only at year end predominantly. I wonder if that's because the balance sheet hasn't been presented during the year, so it's kind of gone under the radar. So we will endeavour to do the current portion every month. It's one of those things that if you don't publish it, you don't notice it's not being done.
Okay. I'd also note the employee entitlements are down quite a bit. So does that mean that some holidays have been paid out or taken, or what's happened there? It's quite a substantial drop from 1.2 million down to 863.
So through Mr. Chair, this is the best, I don't know if you say it, the best time of the year, because between December and March, really through to April, is the time that high leave is taken. So it is a time that you generally see your leave provision dropping as people take it. Beginning of the year, it pretty much increases during the winter season, unless you have an awful lot of skiers out there. So it's not uncommon to see the provision drop off at this time of the year.
Okay. All righty. Any other questions of the balance sheet?
Mr. Chair, could I mention the section at the bottom around the cash and cash equivalents?
Yes.
It's a measure that we are supposed to be presenting to Audit and Risk, and the reason being is you're kind of supposed to be making sure that we don't have any more than 50% in any one bank at a time. It's one of our financial banking covenants that we have. So if nothing else, scan down there and have a look to make sure that we don't have any more than 50%. It is a measure that we breach at times, and it's reported in our annual report. And it's the times that it's breached is when the cash comes in from our rates, generally on maybe a Friday, and we all go on the weekend, wake up Monday morning, and we've got too much cash sitting in our transactional bank account. But at month end, we should always be making sure it's at least 50-50. And we do monitor this daily.
Okay. Which one is our transactional bank? The BNZ, is it?
BNZ.
And so the Kiwi Bank is basically just what? Deposit
Term
funds?
deposit.
Yeah.
So we have a saver account at BNZ, Kiwi Bank, and Westpac. So as soon as we're looking like we're getting near that 50%, we transfer some cash into one of the other two accounts. The interest is ridiculously small, and it is more common for us to actually put it into a term deposit, but there are times when we just need to push the cash across for a week or two because we have our 20th payment run coming up.
Okay.
It is something, Mr. Chair, that we are looking at as part of the review of that, those policies for the LTP. So we will have further discussions with council on that provision going forward into the LTP.
Okay. All right, we'll move on. Yeah, you've added a new section here about accounts receivable and rating.
Yes. So, Mr. Chair, if I could just point out, thankfully, Councillor Hillary questioned this report, and I've talked to our rates ladies, and there is a typo in this report. So the current year, so what this report's showing is the outstanding rates, and the very first portion says the current year's rates outstanding, which is, instead of saying 2.1 mil, it's supposed to be 985,000, which is a 3.2% outstanding, which is slightly lower than last year. So it's a good news story. I'm not quite sure how that worked, and that's the only portion. So what we are finding is that the value of rates outstanding is decreasing because more and more people are taking the direct debit option. There's a report at the bottom here regarding our sundry receivables. So the other revenue that we get in that isn't rates related. And as you know, we use Debt Management Central now for some of our collection services. We used to use RML, and there's still a tiny bit sitting there, which is archaic, which we're pulling back.
Right. Any questions, John?
Yeah, Mr. Chairman, I just asked.
John, we'll go with you. Yep.
Okay. Sorry, I thought that was quite an alarming increase in outstanding rates due to COVID. But is there any trend showing up that some people may be slower or late in making payments to us over the last month or so? Or is it simply too early to tell?
So through Mr. Chair, at the moment, we have had some, I could probably count maybe 10 that I've noticed come through and say that they're having problems with payment. But we do have some payment terms available, and the majority of them we've been able to offer within our payment term criteria.
Right.
There isn't a trend at this point. Probably our biggest trend is getting messages telling us that they think we shouldn't be rating them because of the situation, rather than having payment issues.
Sure. And if we make a payment arrangement, that wouldn't then show up as being outstanding, is that correct?
It does stand out as being,
okay.
Oh, I think it does. I'm pretty sure it does, but I'll just double check. If yes, it is still an outstanding amount, but right. It will be a lesser amount because your payment terms are generally direct debits and generally work towards getting you in line with what's due.
Sure, understand.
Yeah.
So actually that's quite a good position.
It's a very good position, yes. Our rating team work really closely with people as they ring up on very personal one-to-one basis. If they feel that the person they're speaking to may be entitled to some rates remission, then they're proactive in saying, I think you should be applying for this. So yeah, I think they do a very good job in this area.
Yeah, thank you.
All right.
Through the chair, it's just a formatting one for Amanda, please. In the previous slide, which was the SOP report, the current year was on the right-hand side. Could we do that on the current slide as well?
Yes, sure.
Saves any confusion, sorry.
Yeah, I'd prefer that too. It's a good idea.
No problem.
Thank you.
Yeah, Mr. Chair.
Yes, Grant, sorry, I can't see you on the screen.
No, that's okay. Through you, Mr. Chair. Amanda, can you tell us roughly what percentage of people actually pay by direct debit, which I guess is I presume is a more consistent, sure way of actually making sure the payment comes in?
Through Mr. Chair, no, I don't, but I will get that statistic to you actually, and it could be a measure that I could put on here to show you the trend.
Yeah, thanks.
Absolutely.
Very good. Righto, the debt report. This is this is a summary of, I guess, all loans we've got in place at the moment.
Yes. So through Mr. Chair, this is a new report, and the team, when they put this together, were a little eager, and they have included the April debt that we drew down in there. So that's lovely. Right. So I'll start at the top. These are measures that we're required to report to you, and yeah, around liquidity and stuff. These are the measures that are set under our LGFA lending covenant, and so they're now there. And then the list is actually our debt from LGFA. So what I thought I'd just quickly show you is we have a current portion at the bottom of 8.3 million. And in April, we refinanced all of that portion. we drew down. So what happened with the COVID activity is we weren't sure what was going to happen with the interest rates, and the rates at the time were exceptionally good. So we refinanced at 0.75 and 0.8%,
Wow.
which you can see those two lines at the bottom of the top part. That sounds terrible. At the bottom of the list, you can see the two lines that start on the 15th of April. So we drew down to refinance and drew down to just cover any cash shortfall that we thought we might have. They're on very short term, so if we don't require the cash, of course they'll be repaid, and in the meantime the cash will be sitting in term deposit. But 0.75 and 0.8 was a very, very good rate.
Yeah, it is a very good rate. So just in context of that, there's two loans at the top there. I note that are one at 6%, one at 5.5, but they're both fixed. So I guess we're stuck with those, aren't we? Is there any benefit in refinancing those early? I don't know what the penalties would be.
We have now contracted an advisor in this area, and that is something that he is looking at. And we're looking at bringing a quarterly report to you around his recommendations and how we're managing this area. Yeah.
That was certainly possible. There's a possibility of saving some money if we could pay less interest, but it would depend what the break fees were, obviously.
Absolutely.
Okay. Oh, it's an interesting report.
Thank you, Mr. Chair. Sorry,
Shane.
Yeah,
yes, thank you.
That's okay. Just going back up to the page we just left in regards to loans. I see there's a couple there at 16 with years to go, 3.5 each. What were those? And also too, looking at the 16 years at 4.72%, along the lines with the Chair's question about break fees, is that going to be encapsulated in that report coming, or is that something you could look at now?
So through Mr. Chair, when we borrow, in the past when we've borrowed at a time. So we're supposed to borrow to fund our capital work for new capital. But what we appear to have done in the past is really managed our cash flow and only borrowed when we really needed to. So, and I can't go along and go, that 5 mil was because of this particular project, which is a little bit of a nuisance.
Okay.
And our policy says that we can borrow out to 30 years or the life of the asset, whichever is shorter. And yeah, unfortunately, I can't tell you which assets those are.
No, that's fine. And please, just for the sake of process, we can worry about that at a later point. Yeah, for the sake of the meeting.
Okay. Any further questions on that debt report? If not, we'll move on to the next page. Right. Now, well, just before we do, are we all comfortable or happy with those new reports that Amanda's added? I think they provide us some interesting extra information we didn't have before, which is, I think we appreciate. Would anyone rather they weren't there?
No, I think, Mr. Chairman, the clarity of the reports, having just come back and having to try and refresh all my earlier knowledge that I might or might not have picked up, the clarity of the reports is very good, and I think that the format is really bringing the issues forward that need to be brought forward.
Yeah, thank you, John. Okay, well, based on that, or subject to reviewing the final health and safety section, this is what we're going to refer on to council. So I guess we're all comfortable with doing that. All good. Okay, right, the health and safety section.
So the main news in here, of course, is COVID-19 and its impact on both the work program and staff. So in terms of the lead and lag indicators, the team risk reviews, that's the third point there. We will not achieve that this year. We had all of those booked in, ready for finishing by June. We got through 24% of those before COVID came along. So we will get back on track in the coming weeks, but we will not achieve 100% by the end of the year. On the positive side, I can't explain why, but COVID-19 has invigorated all of our contractors to get their health and safety pre-quals done. So we have made enormous progress in that space, and we're up around the sort of mid 90% complete. So we're on track to get that done by the end of the year. And we've talked about already earlier today the achievement of the 80% engagement around health and safety, which is really pleasing. But the real key has been COVID and the Health and Safety Committee working with staff and contractors as we've worked through the various alert levels.
Okay. All right, any questions for Francis? John.
Chairman, I've got a wellness question. In terms of flu injections, do we subsidise those for our team or encourage them to get them?
Yes, they are fully paid for by council because of the scientific evidence around the reduced number of sick days that people with flu vaccinations take. Unfortunately, this year, the demand for flu vaccinations has wildly exceeded the number available in the country. So we're working with the health clinic. We've worked through our priority people, in particular our operations like the retic and treatment staff, those working in the emergency operations centre, and those with underlying medical conditions. And we will gradually work our way through the rest of the staff who want flu vaccinations, assuming that the health clinic is able to procure more.
Yeah. What sort of percentage do we normally get to, Francis?
Oh, that's a good question. I would estimate slightly under half. Some people get them through their GPs anyway, so we don't get involved in those ones. But I would say it's about standard uptake compared with other organisations I've been in.
Yeah, that's good.
This year, like all other organisations, we've had more staff interested in taking them up.
Funny that, isn't it?
Hmm.
No, that's good. Thank you.
All right, very good. Any other questions? Okay. Very good. Well, thank you for that. It was useful having it up on screen. So thank you, Hamish. Right, well, no further questions. The recommendation there on page 29, is that right? Somebody like to move that for us?
Yeah.
Thank you.
The Audit and Risk Committee recommends that the Council receive the quarterly performance report for the period ended 31 March 2020.
Thank you, and seconded by Councillor Casey. Put the motion. All those in favour, please say, or raise your hand. Against? Carried. Thank you. Right, that brings us to the end. Oh, no, it doesn't quite. I'm just looking at the time. It's 10:20. Would you like to have a break or carry on to the end of the main part of the agenda? What's your thoughts?
Mr. Chair, if I may, I'll probably have to break at 10:30 regardless. I've still got other appointments to hear to, so sure. I apologize. My sincere apologies.
Francis?
If I might, the council workshop topic is the continuation of the Institute of Directors Health and Safety Training. And while that fits into the important category, it's not urgent. So that could be deferred and either scheduled separately or as part of our next audit and risk meeting. Okay.
Okay. Nevertheless, are we willing to carry on now, or does anyone particularly want to break at the moment? If not, we will carry on. Yeah, we'll carry on. Okay, thank you. Item 8 then, update on internal audit. Shane.
Thank you, Mr. Chair. So I was hoping to be able to give you a bit more news, but unfortunately the last few weeks have seen no progress on internal audit. Our internal auditor is about a third, halfway through an internal fraud audit. Michael Hawker is the staff member liaising with the internal auditor. Quite deliberately, the chief executive and ET have removed themselves as any part of approving those terms of reference. I believe they have been shared with yourself as the chair of Audit and Risk. So we're just waiting now for that that management report to be released from our internal auditor once she can get back on the ground.
Okay.
And then we will continue with our internal audit program as approved by yourselves earlier.
Okay. Do you want to refresh us? What was the next item on the list? I can't remember.
I think it was sensitive expenditure.
Okay, thank you. All good. Right, any questions on internal audit? Otherwise, we'll proceed with the program as planned. All good. Okay. Right. Item 9, consideration of late items. There weren't any. Item 10, notification of items for next meeting. Any particular items anybody wants to raise now that should be included on the next agenda? Francis?
Just one in the health and safety space. We were scheduled to do our first deep dive session, which was going to be at the Marquino Aquatic Centre. For obvious reasons, we haven't done it today, but we'll be looking to schedule that in for the next audit and risk.
Okay, thank you. All good. All right, we'll look forward to that. Right, that brings us to the end of ordinary business. We've now got an item to move into public excluded business. So somebody like to move that happens?
So moved, Mr. Chair.
Thank you, Councillor Marsh, the seconder. Thank you, Councillor Headfield. All those in favour, please raise your hand. Against? That's carried. Thank you. Right, we're now moving to public excluded. So